Welcome to the Upstream Ag Insights interview series. We'll dive into detailed conversations with leaders that bring exceptional insight into topics that are crucial for agribusiness professionals to think about. In this first episode, I'm having a conversation with Brad Oelmann, CEO of Farrell Growth Group, and Brad has spent his career inside crop inputs, ag retail, and distribution. We're going to explore how Farrell benchmarks retail performance, what the strongest ag retail operators are doing differently, what financial and strategic indicators define a thriving ag retail business, and what the future might look like. So with that, let's get into it. Brad, thanks for being here today.
Yeah, it's great to be here, Shane.
Yeah, I'd love to start off with just your background, your career trajectory, and some of your experiences.
Yeah, so I guess I grew up on a farm in Iowa, went to Iowa State. The first part of my career, I was with American Cyanamid in various sales and marketing roles. I went from there to UAP, which is now a part of Nutrien, for a short time, and then spent a big chunk of my career with the United Suppliers as marketing manager and then CEO. We then merged with Land O'Lakes a few years ago, and I was with them for a short time. Spent some time with Albaugh, a private equity company, and the last 4 or 5 years, I guess, I've been with Farrell Growth Group.
That's awesome. You've basically touched it all then, from being in kind of the retail distributor to manufacturer to what you're doing today and growing up on the farm. So that's why I'm excited to talk to you today, is because you bring a really unique and diverse perspective on all things agriculture, but I think specifically to the topic that I really want to touch on today, and that's kind of ag retail. And so maybe before that, let's even dive into what you're doing today with Farrell Growth. What does Farrell Growth do? And tell me a little bit about them.
Yeah, so Farrell Growth Group, we do four things. We do financial benchmarking in ag retail. There's about 25 members of our group. It's across the U.S. We used to have some Western Canadians as well, but our group got too small there with consolidation. So still looking to expand that. We have two networking meetings a year, and we bring in various speakers from all parts of ag business, and it's more of a networking opportunity. Most of our members are independents and don't have a lot of those opportunities. We also have some independent co-ops, so it's a great mix of progressive ag retail customers. The third thing we do is M&A, and a couple of years ago we joined with Ocean Park. That's a small investment bank. They've been really heavy in biofuels, ag processing, and wanted to get more into ag retail. So we joined forces with them on the M&A front, and they're involved in all four aspects. And then we just do some general consulting, although that's a pretty small part of it.
No, that's awesome. And I can see where even the benchmarking dynamics, you have a really strong insight into the financial dynamics of these businesses. And then when you get into the M&A, I can see where there's a ton of synergy, being able to diligence effectively and really navigate the complexity of all those things. So that's an awesome kind of combination of services there. And maybe with that, I know the area that's really fascinating to me, and I actually didn't realize you guys did some of the M&A side of things. But what really is interesting to me is the benchmarking side of things, and kind of looking at the retail health and some of the things you're looking at there. And so maybe before getting into some of the specific details, maybe what sort of things are you benchmarking? Why is it important to some of the retailers and partners that you're working with? And how do they use some of the benchmarking tools you provide them?
Yeah, I think the biggest part is just awareness. Like as companies get bigger, they can benchmark against themselves, right? Their different locations and all that. But how do you compare how you're doing versus the industry? So I think there's, we're in basically every crop and every market in the US. And so weather and things like that can come into play, but just understanding the different business models and the costs associated with each, the margins associated with each, just gives people a good understanding of where they sit. We can benchmark against a lot of different geographies, like we can just look at the Corn Belt or look at the Horseshoe or whatever. So there's a lot of ways we can slice and dice it that just provides insight into their own business.
Yeah, that's awesome. I think I can see where if you're sitting there in your own little island with an uncertainty around, hey, how are we doing on pricing of, I don't know, I'll make it up, glyphosate or crop protection at large or margins or OPEX, whatever it might be, so you can start to get an understanding. And I think the only way, like we were talking about before the call, the only way to get better is to kind of find out where you're maybe lacking or maybe you're not doing things properly. And so I can see where that insight really comes in. I know when it comes to ag retail, I think there's always a talk of a bunch of different segments of it, but the margin side of things, whether it's the gross and net margin trends, I'm curious if you can talk a little bit about what sort of trends you're seeing over the last, we'll call it 5 years if you want, or 10 years if you want to go out that far. Just how are things trending across the margins for, break it out into fertilizer, crop protection, and seed maybe?
Yeah, it's a great question. The hard part about it's probably better to talk 10-year trends just because COVID really messed things up in a positive way for margins. But in general, margins are hanging in there pretty good. Fertilizer's probably a little more insulated just because of the infrastructure it's required to serve growers. Chemicals, maybe the last year or two, we're seeing a slight tick down, and seed is the hardest margin part for an ag retailer, and that's probably flat to slightly down as well.
Interesting. And so there's a little bit of nuance there. Maybe we'll dive into each one. And so when you look at the crop protection, you said the last couple years have maybe been a little more challenging on the margin front, but I suspect based on just inflation and different price increases that the manufacturers have had, that the revenue is actually going up, but the actual margin number is going down. But is there a specific reason you think? I mean, the obvious answer might be generics, but what specific reason do you think the last couple of years have been harder on the margin pressure for CP?
Yeah, I think it's because of, there's a lot of seed dealers who put up a shed and sell crop protection products. So it's just an easier business to get in and out of. And as growers get bigger, there's more price pressure. I see more self-service growers maybe on the application side drives that to a degree because most retailers are subsidizing their services with product margins. So as growers become more self-sufficient, this reflects in the chemical margins because it's being subsidized with their application services in particular.
I gotcha. And so is that the main way that they've been fighting that, call it more competitive dynamic within the CP, is more layering in the application services side, or is there anything else that you see some of the good retailers, or the ones that, when I say good, I mean the ones that are in, call it the top quartile from a profitability perspective? What do they do different on the CP side of things to manage that erosion?
Yeah, for me, I think the biggest insight I've gained is it seems like people say, okay, I got this full service grower and here's my value proposition. I've got this cash and carry or a grower that doesn't need a lot of my services. So I got my value proposition figured out there. The problem is most growers lie somewhere in the middle. They need some service, not full service, not no service. And most of the value propositions in ag retail really don't address that. They have a full service price, a cash and carry price, and I'm, generalizing a bit here, but I think it's really important to understand your cost to serve. And it's hard to figure that out, but I see that's really the biggest challenge is there because they aren't charging for a lot of services, recommendations, scouting, a lot of that's built into their price. They almost have to look at unbundling that and then maybe figure out a different way to rebundle it.
Yeah, I think it's interesting, and I think your comment too on the customer themselves and like this kind of like in between dynamic. And I in preparation for our conversation, I was reading some of the stuff you've either been interviewed on in the past in the Daily Scoop and things like that. And I know one of the things that you talked about that I very much agree with and am adamant about is that need to understand your customer and have those detailed conversations. And are there certain types of questions that retailers that are doing a good job in managing their customer relationship are asking? Is there certain types of conversations they have that maybe others don't?
Yeah, I mean, I think, they're looking beyond a recommendation and a transaction and understanding deeper of their customer's business. How are they financing growth? How are they thinking about succession planning? I know some people are reaching out to the younger generation that thinks differently than their fathers or mothers did. And how do I have different conversations with that? And they're all very complex issues, but you really got to take each customer and say, how are they thinking? How are they acting? What can I do to add more value to the relationship?
Yeah, it's interesting like the way you frame it too. It reminds like this is probably true in anything, whether you're founding a business, whether you're an executive somewhere else, but just being incredibly curious about your customer's business, to your point, and asking those questions that other people aren't, because I think it shows that you actually care for one, but it also allows you to uncover those unique insights that nobody else is going to have, which allows you to position a product, offer a service, do something that is uniquely different for them. And I'm reminded of a story actually when I was still an agronomist in ag retail, and there was a large farm that had three brothers with three sons from each of the brothers, and we went in and had our crop planning meeting and conversation about some of the things that they should be doing on some irrigated land in wheat, and started talking about plant growth regulators and utilizing different potassium rates and those sorts of things to manage lodging and standability. And the older fathers were like, we don't really want to talk about that. But the as we were walking out of that meeting, the sons like followed me and the salesperson that I was out there with, and we're like, hey, like anything you have on that, we want to talk about it. We want to have a conversation. We're gonna try. We have our own little plots of land that we can try these things on. And I think it showed me, anyways, that you just need to throw some of these things out and not be afraid of also getting turned down, because some people don't want to hear about copper or plant growth regulators, but others, they're going to be like, I never thought of it, or nobody told me how to use it properly so that I could derive a better outcome from it. So that really resonated with me, what you said there.
Yeah, it's funny. My anecdotal story around that is I was talking with a 12,000 acre grower actually in Canada, and it was a husband-wife team, and they were incredibly saw so much value in the ag retailer relationship and the recommendations and everything. And then after about 3 or 4 years in the programs they put together were working, they're like, well, wait a minute. It's the same thing year after year, and it actually erodes the value of what they initially do. And I think sometimes retailers are so concerned about their credibility that until they've
Yeah.
seen something for too long, they're not willing to recommend it. And I think there's a way to say, hey, we've been looking at this biostimulant or whatever practice or program or product that they're talking about. We don't have all the research in to feel very confident, but we
Yeah.
we like what we see. And I think there's a way to bring some new ideas forward without ruining your credibility. Just saying, like, there's some people trying this, and we're anxious to see what we learn from it.
Yeah, it's I always thought about it as this is specific maybe to like new staff coming into a retail setting, but to your point, it was almost this conundrum in a regard, because the expectation of a 22, 23-year-old sales agronomist coming in was, hey, you need to build a relationship with the farmer. You need to go and grow the business. And a farmer would come in and ask for what they used last year, and it was hard for them to say, okay, well, I'm just going to give them what they want. Why would I try to push them when they don't know what I know. They don't know how to think about this new thing. I don't want to challenge them. And so it's almost this culture dynamic of like, you need to enforce that, hey, you know what, be curious, try to talk to them about something different so that they're not using the same group one herbicide each year, the same group four, the same old fungicide at half rate or whatever crazy thing they've done. And so it's I think a lot of it does kind of come back to this culture dynamic of like, how do you embed that within some of the leadership to enforce down, hey, just go out and ask questions. You don't need to sell anything. You need to go out and have a better understanding of that farmer's operation than when you first stepped on that farm earlier that day, right? So
You bet. In fact, I think I saw this from you. You mentioned recommendations and how do people differentiate a recommendation? I think too often the fact, well, this worked last year, let's just put the same program together. But I think you shared some Stratus research that talked about all the elements of a recommendation from rotations, herbicides to cost comparisons to all these things that make up a recommendation. And I just think about, well, how many times are people thinking about bringing all that information forward that would truly differentiate over many of their competitors a recommendation?
Yeah, no, it's exactly. There's so many different angles, and I didn't want to get too sidetracked
Yeah.
on this. I think I wanted to talk about the benchmarking stuff, but I think it's crucial to actually look at, because if your margins are declining, I mean the need is to do something different and to actually invest in trying to find a better way, or you can manage your operating expense and capital expenses in a different way too, I guess, and do that. That's one of the things that I think about a lot, and we don't need to get into that right now, but it's like everybody wants to be value added service first, but what does it look like to be incredibly low cost and come at it from that angle? But that we can maybe talk about that at the end. I do want to hear on the fertilizer side of things too. The margins there, I assume the revenue's been broadly up again because there's actually been increased costs specifically this year, or prices on fertilizer. But how are the margins trending on the fertilizer side of things?
Yeah, they're hanging in there pretty good. Of course, when you have up and downs with the fertilizer market, there's wins and losses from that in ag retail as well. But overall, I would say that's really the strength of a lot of retailers, just because, there's more expense and cost with storage and blending and all the things that you do in fertilizer. And so I think those margins hang in there better because you can't just put up a liquid tank in a dry shed without spending a bunch of money. So I think that's part of it. Obviously, they've been doing it for decades. Retailers have and can operate it pretty efficiently. So that part of it, and there's obviously a lot of blends and stuff that happen with micros, with biostimulants, with all these things that can add more value to. And that's where you see the differences in margins in ag retail is how are they, creating blends and unique product mixes that are a little more value added than selling straight commodities.
Yeah, that to me is just, I don't know. I'm curious. I'll throw this out. This is something I threw out to the VP of, or AVP of fertilizer when I first started at a retail in Western Canada, and he basically laughed at me. And I still think it's a good idea, but I think there's some challenges, and I'd love to hear your thoughts. But there, you put up these assets, blending assets. I mean, they cost a lot of money. You're running them more. The more you run through them, the further you need to do maintenance and all these different things. And so part of me was like, we want to sell more value added products. Why not just stop bringing in urea and straight MAP and straight potash and say, we're going to bring in only value added fertilizers like Amidas from Yara, or a micro essential product line from Mosaic, or there's new ones now like Phospholutions and Ostera and those sorts of groups. But one of the things I wanted to do was put like 3 locations and just say stop commodity altogether. You now have to go out and have a conversation with the farmer. If they don't want that, then they'll go elsewhere. But our margins go up, our assets depreciate in a, call it slower way. But I'm curious what you think of that, or if you've seen anybody try something along those lines.
Yeah, I can't say that that's an interesting idea. I think if, your focus is only that, I mean, at the end of the day, if you got to have a radius drawn around your retail
Sure.
location and dominate it, regardless if it's a full service, a self-service grower,
Yeah,
somewhere in between, regardless of how they view blends and micronutrients and all that. You just have to, hopefully you lead your customer, but sometimes you just have to meet them where they're at and
sure.
supply what they want, even though you think maybe you could give them a different recommendation that'd be more valuable to them.
Yeah, no, I appreciate that perspective, and I think it probably is the more we'll call it pragmatic way to approach it too. And with nowadays, you can put coating assets onto your blender, so you don't have to go in and manage if you have 10 bins, you can just keep the urea there, but coat it with whatever, a micronutrient or a biostimulant, to your point. and
Yep.
and so tons of opportunity there. And I think one of the things, and I don't know if you see this from some of your groups, but when I've talked with some of the retailers that I would consider, call it more progressive, they would have a specific target on the percentage of the bulk fertilizer going out that has a attachment of a biostimulant or a micronutrient coated onto it. Is that something you see too, or anything else that you see along those lines?
Yeah, I mean, people put targets out there. I think that it's always peeling the onion that's important. And you can look in within a retailer's base, just the education and training and how do you support your salespeople with ground and air support because there's so many things agronomist has to position that how do you how do you get messages to the grower that gets them asking about some of these things with the agronomist? And I think, retail's getting way better at that. 95% of the marketing mix of an ag retailer is the agronomist talking to the farmer instead of some, you know, hey, what about, using social media or radio or whatever medium you're using? There's got to be a way that you're bringing up some of the ideas beyond just your agronomist, so the farmers at least asking them about it.
Yeah, and I'd love to dig into that a little bit more in a bit too, and kind of talk about some of the digital things that you see from some of your retail clients. But maybe one quick last question on the core benchmarking side of things. Is there a North Star metric that you look at within some of these retails where it's like this is what I can look to and see the health of a business, or is it a combination or two or three, or is it just not that simple at the end of the day?
Yeah, I mean, I wish everything was more simple than it is. It does get complicated, but I mean, at the end of the day, if you want to grow your bottom line, the only way long term you're going to do that, and I'm talking long term, there's, product cycles and everything else that can help you, but you got to grow your top line to ultimately grow your bottom line.
Yeah.
And there's just a lot to that. You have to match your expenses with your gross margins, whether it's people or fixed assets. So it is just putting the combination of your value proposition and putting the right infrastructure behind it for, whatever your target profitability is. And, the biggest thing I really believe in ag retail that people could view differently is I'll call it operational segmentation. It's really hard to segment an larger organization with psychographic segmentation, but what you can say is what are the core functions I'm doing for this person, and how do I capture value for that? And I think that's really important long term, again, in understanding your cost to serve each grower and what you're doing for them. And if you're not charging for all these services, at least figure it out with the 5 to 10 growers per location that are driving 80% of the business.
Yeah, I think that's really interesting too on that side of things where you do just need to at the end of the day go in there and have a better understanding of the call it how they think, how that customer operates, what the potential is, what the wallet share is, and actually put in the systems and expectations of staff to do that and give them the ability to do that. And I think, I used to think I remember a CRM initiative getting implemented my first year in the industry, and I was like, this is silly. It doesn't make any sense. It's taking me time and all these different things. And I think, and I know CRM can be a dirty word in ag retail or just in general, people think it's like a big brother thing or something, but the amount of data and insight that you can actually derive if you're actually doing a good job of taking the conversation and putting that into a place where you can leverage it. And this is unrelated to ag retail, but I actually was just watching the Ag Co tech days last week, and Agco implemented this thing where essentially they take all the conversations that their team are having with farmers, with dealers, and they put it all into a system, and then they have created like an LLM sort of interface system that can actually spit out hey, how might a farmer think about this product, or at least start to get some insight into things. And that's not quite the same as segmentation, but I think it's in that same vein of being able to first collect and understand things about that customer and then be able to effectively put them into not a box necessarily, that's not the right way to do it, but into a way that they want to be treated, supported, helped, all those sorts of things.
Yeah, for sure. And that the retailer has so much good data on farmers and the transactions and the recommendations and all that there's just more efficient ways to mine that information
Yeah.
in a way that can help an agronomist or help the farmer or whatever. So and retailers are getting way better at that than they used to, and that's good to see because I think it's really important.
Yeah, totally. Maybe switching topics a little bit, but you've been adamant about this. You've even alluded to it a couple times beforehand here. When it comes to the need to charge for services and unbundle services from the product, what services are you? I mean, this is probably a two-pronged question of, is there unique new services that you're seeing some of these retailers implement and deliver to their customer base? And then maybe the second part is, how have you seen some of the better retailers take a basic scouting service or something along those lines and actually be able to break that away from that bundled with the crop protection or fertilizer sort of sales approach?
Yeah, I think it's work in progress on all fronts. I know of one retailer who's created three price segments, basically a high end, full service, and no service, and something in between. Um, but there's a lot of I mean, some people ch charge for scouting, some don't. Most don't charge enough for custom apps, so they have to get it in product margins. Um, Soil sampling, some include it in with the fertilizer program, and some charge separately. So everything depends, and I say this a lot, and I'm not avoiding the question. It's just a recommendation has never been charged for separately, right? And what's interesting is, well, the farmer won't pay these unbundled for unbundled services, and that may in fact be true. But I will say I saw another report that said the use of crop consultants is going up. And right there tells you a farmer's willing to pay for it because they're not selling products, right? They're selling services. And so I think it's just, again, understanding, having the conversation with the farmer saying, here are all the things that I did for you. And what's
Yeah.
unfortunate, sometimes the management of a retail organization has no idea all the things they're doing for a given farmer because they're not charging for them. So I think the important thing is, first, let's capture what you're doing for each grower. And then I'm not suggesting everything should be unbundled, but I think having an understanding of all those things gives you better insight in how do I create value propositions for all the different types of growers I have.
Yeah, oh, I totally agree with you on that. And I think it's broadly not that well done. We kind of take it for granted of like, well, you know what, because a lot of these, they're all local. You're in your small town, you're friends with them. And so nobody wants to start pointing out all these, I did this for you, or saying, hey, I have to charge for this and that sort of thing. But the best, I used to work for a manager that just an incredible individual that I learned a ton from. And he used to just be like, yeah, you just have to draw the line and have those tough conversations, and they'll respect you more for it over time. But it's just having the confidence to go out and do that. And I even had, you would know this individual, Garth McDonald, was
Yep.
really influential in my career early on. And I remember having being priced by a large customer in the area, and I was out there doing the soil sampling. I was out there making the fertilizer recommendations, and he kept wanting, I think it was $20 off his urea ton or something like that. And Garth just sat me down. He's like, "What are you worth? What are you worth to him? What would he be doing without your recommendation, without your support? He would be making an inferior decision." And I think that was actually something that gave me confidence to be able to go out there and have a more direct conversation that, hey, you know what? I won't be able to do this in the future if you're not willing to, pay that tiny premium on that ton, right?
Yeah, and I think that's a valuable conversation to have, management in the sales organization. I know I did some work for a customer one time, and basically the salesman, and they were trying to create more work-life balance and make sure that, they're getting value for things, and came out with a price list, and the salesperson didn't believe in the price list, so he knew he couldn't cut the price, so he said, well, I started calibrating planners for some of my customers as a way of offsetting or providing more value. And those are the conversations everybody needs to have, because it's like, well, if we're doing more things, so let's adjust the value proposition based on what you're doing. And if you're struggling with that value proposition, then let's have a conversation about what you are worth, right, for what you're doing. And again, all these things are easier said than done, but
Yeah.
you gotta do the roll up your sleeves and do the work to figure all that out.
Yeah, Totally. I mean, it's what's the saying? What got you here won't get you there is like the career ladder sort of thing. But same with in ag retail. What you were doing in 2015 or 2005 is not going to actually get you disproportionately large margins or business from the customer because things become table stakes if you don't actually start to evolve what you're offering or how you're charging for them to your point. And I think that gets missed. I always think of ag retail as the as like a red queen, which is essentially like you need to keep running faster and faster just to stay in the same place, which I think is broadly true. But you can also be strategic with choosing what not to do sometimes too, right? And I don't know, maybe this is there something that you see a lot of retailers doing that maybe they should stop doing or do less of? Is there anything that comes to mind to you on that front?
Yeah, again, it all depends. I mean,
Sure.
there's clearly things they're doing for growers that maybe the grower's not seeing value in, and
Yeah.
they could stop doing that. So, again, all these things are all over the board, and
Yeah.
but until you capture what you're doing and go through
Yeah.
that list with the grower and say, look, if some of these things don't have value to you, then let me know and I will quit doing them, you know?
Yeah. Oh, I think it's a great point. I think and I appreciate that comment too of like you need to be precise. I mean, it's easy. We can sit and try to talk in generalities, but it just comes down to doing some of these fundamental processes of setting the expectation of staff to go out and have an understanding of what that customer values or what they're doing, and then from there you can start to evolve and bring a more customizable approach into what you're doing with them.
You know, just one quick comment, I guess back to some benchmarking stuff. I've
Yeah.
been watching service revenue increase over the last few years, and I'm like, okay, that means we're figuring out how to charge for services. And then I thought about it like, well, the cost of service income has probably went up faster than that. So
Yeah.
I'm not sure we've made a ton of headway, but I think it's something we're all going to have to get a headache over and figure out over time for sure.
Yeah, no, that's totally true. And maybe this question kind of ties into that actually. And so I think I've seen you comment on this in the past that, there's retailers are more likely in the future in the next, call it 10 or 15 years to sell lower product volumes due to efficiency or new VR services or regulation, whatever it might be. And so just curious how you think about whether you do think volumes will decline and maybe what you think replacing that margin can look like. And again, we've kind of talked about services, but curious if you have any specific ideas on what some groups should be thinking about.
Yeah, and I think product volumes will decline, just to support your point between see and spray and all the biostimulants and fertilizer mixes and even different application timings closer to when the plants need it. I think all those things are going to make it more challenging. Now, there's an argument to be made, well, you're growing more bushels, you're going to need more fertilizer, all that too. So there's some puts and takes to it, but overall, I am concerned about product volumes. And then, you either have to look at how do I make my people more efficient? How do I make my assets more efficient? Or, we see more locations being closed in ag retail and servicing a broader area. And a lot of that's because you can't find labor. So it's probably the one blessing in disguise on labor issues. So there's a lot of things you need to do. If you're selling biostimulants, maybe you're getting more margin on the fertilizer, so that's offsetting your volume decline. So there's a lot more to that too to unpack, and it's complicated. But you just again got to look at it and say, well, I think you and I have talked about this before. It's death by a thousand cuts in retail, and okay, well, this little thing's going to impact me this way and another way, and um, what am I going to do broadly to change that dynamics? And it's either increase your margins with more value, it's cutting expenses, it's or growing volume too, finding new customers, and all those things are a part of what people are doing.
Yeah, no, it totally makes sense on that front. Maybe in that same vein, around the services dynamic and lowering volume, have you seen any of the Farrell Growth partners that work with you guys, anyways, that have invested in a see and spray asset or something similar to a John Deere see and spray asset? And how are you seeing them be successful or not with that service offering?
Yeah, there's a handful of them that are utilizing that technology, and I think broadly everyone thinks, and there's still bugs to be worked out, but broadly I think people see that it's bringing some value. So I don't know if there's any conclusions drawn yet. They're just testing it a lot like drones. Some people are testing drones and they're getting their experiences to figure out how they best position it with their customer base.
Yeah. Have you, I don't know if this is something you've seen, but one of my thoughts on that side of things is like we've traditionally sold a product price in retail, so you pay X for the herbicide and then you're paying X for the service. You know, to me, when you start to bring in a see and spray capability, you're selling a, quote unquote clean field. And so the product itself doesn't matter. That's not quite true. The agronomist to me is like, well, there's residual and resistance management, all that. But
Yep.
fundamentally, you can bundle in a generic product into that, and you could go upstream to literally have a direct relationship with some Chinese manufacturer if you wanted and say, hey, let's get the lowest cost product possible, bring that in, associate that with the actual see and spray offering, and that's what the farmer gets unless they want something else, and then they pay an incremental cost. Have you seen anything like that be done?
Yeah, there's some people that are just saying, hey, for, 75 bucks an acre, I'm going to give you a clean field. And, the farmer doesn't necessarily know what's all in it or doesn't know ahead of time. So there's some success in that. It does seem like people want to know, regardless if they know anything about it, they do want to know what's going on in their field. So, but there are some people doing that for sure.
Yeah, I think there's because of all the different technology, there's no lack of ability to be creative and try different things. Not all of it is going to work, of course, but I think a retail is crazy today, given the dynamics in the market, to not be thinking about or trying something subtly different than what they did historically, whether it's related to see and spray, whether it's related to some new service offering with soil sampling or whatever it might be. But I think there's tons of opportunities on that. And to your point, I think the jury's out on what will work and how it will work. But I do like to see what these innovative retailers are doing to try to navigate things, because the status quo, kind of to your point, is the margins on a lot of these products are starting to subtly decline. Operating expenses are going up. And so if you take that out to the kind of end, that's a really challenging dynamic for a retailer, especially in a consolidating environment of farmers and with different dynamics with your retail manufacturers. And so anyways, it seems like something unique has to be tried at the very least.
What's interesting to me about just reflecting on what you said, though, it's amazing when you look at, and you can go outside of ag and look at all the mergers and acquisitions and everything that takes place, and they're all whatever strategic reason they're doing it. But boy, the whole customer service, customer experience thing, it just seems like there's still a lot of opportunities to bring value just to customer service, customer experience, because everyone tries to create so many efficiencies that there's value getting lost in some of those things that that's why understanding your customer better matters, because I think customer service, at least in my consumer life outside of ag, I get frustrated as heck with the customer experience because I can't talk to anybody. I can't help me have someone walk through what I'm trying to get to, and it's really frustrating.
Yeah, I 100% agree with you on that. That's been one of my uh, painful things that dealing with. I remember still, and this actually leads into what I wanted to talk about next on kind of the digital front, but it goes back into this mindset that when, new companies were coming out with, hey, farmers want to deal, what is it, belly to belly is always the saying, and nobody would argue that, but they also want to be able to take some action on their own time where needed, but then to your point, be able to reach a human being when they want, as they want, which I think retail is uniquely positioned to enable, because you still have a local person, local asset, local office. But if you have a digital capability, all of a sudden that farmer still has some flexibility there. So I'm curious on the digital front. It sounds like you, I don't want to make too many assumptions, but it sounds like you are an advocate of retailers should be thinking about how do we offer, not that experience is only digital, but when it comes to the customer experience, they should be thinking about a digital experience for their customer base.
Yeah, I do believe that. I mean, and everyone says, well, everyone said when FBN came on, everything would be transacted digitally. And, there isn't a lot that gets transacted digitally, if I said that right. But like seeing your accounts online and all those things that we do, go pulling up your bank stuff and all that. So it has applications, and I think we talked about this earlier, but even you're asking this agronomist to do all these things, and somehow, something's going to get missed in their conversation with the grower. So if you're promoting a biostimulant or a micronutrient or an adjuvant or something beyond the main things, like how do you provide that support for the agronomist? And are you sending emails to the customer? Are you whatever, however you're interacting with them beyond the agronomist, I think is an important part of the future. And I think people see better sales results when they have some sort of digital platform that's supporting their business.
Yeah, I totally agree with that. I think the ability to ease the business and then to be able to your point understand the customer better through the digital aspect and support the marketing. I think what's fascinating to me about the digital side of things is when you start to connect the specific location of a farmer that is connected to their phone, that's also connected to their purchases and purchase history. All of a sudden you have a better ability, to your point, to get a biostimulant message out when needed, because you can say, hey, it froze north of town last night, or whatever it might, maybe it wasn't frost, but it was cool, or it's supposed to be really hot there over the next couple days. Let's go and send a message out about biostimulant X that we've been supporting from Corteva or whoever it might be. And so you get this really interesting opportunity to be more targeted and to support those agronomists like you mentioned.
Yeah, I think too, like even all the predictive weather and disease and insect models that are out there. I mean, usually by the time you realize disease or insect pressure is there, you're already playing catch up, right? And the more that you can promote those things to the farmer, where you feel like it's working, it's a way of getting ahead of some of this before it's too late. So yeah, I think there's just a ton of opportunities out there.
Yeah, I think I think farmers, I mean, everybody knows I write a newsletter these days, or anybody that's listening to this would know that. But I used to write a farmer-focused newsletter that went out to all the customers in a region. And the feedback I got from them was like, hey, we actually feel like we're up to date on what's going on. And it was just an email saying, hey, here's, wheat midge are coming in. So let's have a conversation about it. But all of a sudden you could really reinforce to them that, hey, you know what's going on, you know what problems are coming, and you can be the one that is associated with adding that value to their business and to their knowledge base. And I think that just can be amplified so well with digital systems, whether it's using Nutrien has their new offering, or it's AgVend or Bushel or whoever. There's a lot of different offerings
Right.
out there today, right?
Yep.
Um, yeah, I think maybe on that front, I'd be curious. This is related to not really related to digital, but on the input manufacturer front, I'm curious, are you seeing the relationships evolve between retails and manufacturers over the last 10 years? Has there been a change or a divergence in how things have went, or maybe a retail picking one or two and focusing more with them versus historically spreading things out? Or just curious if you're seeing any evolution on that front.
Yeah, I think there's some dynamics going on there. I mean, one is I think in general, input manufacturers don't always think their message gets to the farmer directly through retail. So, you see most of them have added resources to, and not transact business, but just demand creation opportunities with growers by adding more of that. I mean, I think there's more partnerships. Most retailers are now picking one or two major manufacturers to support. Um, so, and not all of them do, but most of them do. And then hopefully you're getting, a better level of support from that manufacturer. And so that seems to work out pretty well. But yeah, there's several of those things that are happening. And I do feel there's more, I think back 20, 30 years ago when we tried to get forecasts and all that, like all that's getting better, just planning the business. Um, is a lot better than it used to be, 30 years ago. So I think that's a positive step. I wish it seemed like during COVID we were getting that to happen better between the grower and the retailer, and we just got to keep finding ways to plan the business because there's so much inventory slop and just a lot of expenses that wouldn't need to occur if the grower would plan their needs better with the retailer.
Yeah, I mean, you know this better than I. Working capital can absolutely decimate margins and cash flow and all those different things. And I think this goes back to, I'd call it the kind of theme and kind of core message that you've shared today is like understanding your customer just goes so far. And what I mean by that is if you're out there having a better conversation about what crops they're putting in next year, what weed problems they have, you can much better forecast the herbicides necessary, the fungicides, and all of a sudden that trickles down to being able to early order products, get a little bit better cost position, and then also not have those stuck in inventory later on. And I think that's something to me that I have never quite, when I was in retail, what we were trying to do with that, I'm sure they've done it now, but was how can we actually incentivize the sales team with structuring their bonus around how accurate their forecasting is to the actual outcome. And again, there's always going to be things that come up. All of a sudden, you can't forecast for some disease outbreak that had never happened before and those sorts of things. But fundamentally, you can get people to think more critically if you put the incentives in place to get them thinking that way, right? So I
Yep.
think that is kind of such a core thing that again can be valuable when having those conversations with the manufacturer, and they value that relationship even more, I imagine, then too.
You bet. You bet.
Maybe this is going back to some of your, I'll call it a previous life, but I am curious on it. I'm Canadian, so I don't have as strong of understanding of the three-step distribution in the US and Canada. We've seen a lot of, call it consolidation, vertical integration from the manufacturer as well as upwards from some of the larger retails. But when you look at the US distribution with the Rosens and the Winfield Uniteds, how do you see distributor consolidation evolving, if at all? Do you think the next 10 years will look different in terms of the role that a company like a Winfield United plays relative to where they stand today?
Yeah, I think there will be an evolution. One, there's continues to be consolidation amongst retailers. Some of the retailers are bigger and they don't need all the logistical warehousing credit services that distributors offer. And there's others who do. And I think it gets back to knowing your customer base and what they need and what they value and developing an offer based on that. The whole thing with the grower retailer relationship holds true for the retailer wholesaler relationship. So, and you see things going on in that regard. There's some distributors like I'm just going to be the best low cost model in what I do, and others are adding value added services, to help support retail. And I think there's all of those things make sense. It just feels like there is too much distribution, and I can't tell you who I think's going to win and
No.
lose in it, but it feels like there's more distribution than what is needed. But time will tell.
Yeah, it's interesting. It kind of goes back to the same kind of comment you made about the retailers themselves, and like some want, the farmers want more service, some don't want service. And you mentioned the same kind of dynamic with distributors. Some are low cost, no frills, some are more, we'll call it Winfields, more value added, having different services. And as you see the retail consolidation, some of these, you get large cooperatives that they can invest in some of their things that are customized and focused on what they need, not some service from Winfield or whoever. And so it'll be interesting to see how that evolves and what that looks like in the future when you start to look at some of this consolidation dynamic, that's for sure. And maybe one other comment on what you shared that I thought was insightful too is like this dynamic of being able to plan better and work with some of these groups, I think ties back into the digital aspect as well too, where how can you start to connect these? Because I remember old forecasts used to be on like an Excel spreadsheet and it was all disconnected from everything. Now you can put it into whether it's your ERP or your, we'll call it a system of action digital tool that is all tied up. You can roll it all up to the product level, the company level, whatever you want to do. And then you can theoretically take that and connect that into the distributor or the manufacturer. And specifically, if you go to the manufacturer and you have scale, all of a sudden you can vertically integrate back into some warehousing or collaborate with three other large retailers, for example, that or cooperatives that might want to invest in some assets. And so that's where I think it gets to be kind of compelling, is how do some of these new capabilities really change the dynamic of what's possible and what makes sense for retailers to do.
Yeah, I agree with you there. There's been a couple, three times in my career where, recently we heard the destocking issue from some of the manufacturers in their public comments. And, we have the systems and capabilities in place to share that kind of information, so it's not a surprise to anybody. So I do feel that is going to get a lot better in the future, and some are better at than others. But that capability and the technology exists that those things shouldn't be a surprise how much inventory is in the channel, right? We should know the answer to that. And I know people are working on it, getting better at it,
Yeah.
but that definitely needs to happen.
Yeah, it's exactly it. It seems crazy that we haven't been able to do some of those. And I get information asymmetry is always going to be a thing. There's always going to be people don't want to give up some of these things, but I think there's enough, call it net loss at various points in the value chain because of the inefficiency that it will begin to make sense to I'll call it collaborate in a little bit more interesting way to manage things, which ultimately is not just better outcomes for the manufacturers and the distributors and retailers, but the farmer, because how often is there a product that's not in the right place, or you have to use an inferior product because the other one that you actually want is not there. And so all those things kind of obviously just go throughout the entire value chain.
Yeah, and you said this earlier too, and for 25 years, working capital costs weren't, because our interest rates were so low, and now that they're higher, it becomes more important because people are less inclined to stock inventory if they think there's plenty, because they don't want the carrying costs of it. And I think so being really intentional and smart about how you're forecasting and working with your suppliers at all levels of the channel is really important in higher interest rate environments.
Yeah, I totally agree with that. And it's one of my, this is whether it's a Costco or Little or Aldi, but one of my favorite books actually goes into, it's called Retail Disruptors, and it's all about like the hard discounters like Aldi and Lidl or Little. I don't know how to say it exactly, but they talk about how it's just like managing SKUs. And I think a lot of the time retail's like, a farmer says, hey, I want X, or hey, I need this, and they order it in instead of saying, hey, you know what, here's the SKUs that we are actually going to bring in. Like I remember going into one of the retails I worked at, and there was just multi-million dollars of micronutrients and biostimulants because everybody just had a free-for-all. And I was like, no, let's condense this down to one specific company that is three SKUs, because we can fit this across, and then we'll go to them, build out a proprietary product that is actually specific to regions that are going to make sense, and we're going to be able to differentiate there. And all of a sudden you reduce your capital cost and you actually increase your sales and ability to go have a better conversation with the customer. But it's just so fascinating to me that there's not more of some of those sorts of things done. And I think retailers are getting better at that today, but there's been historically a ton of just, well, if that's what the farmer wants, we'll bring it in. And I think that's where a lot of this order taker sort of view gets put in, instead of being the one that goes out there and actually creates demand for a specific type of product and product that is built for that specific region or customer base.
Yeah, and I think too, just competition and everything dictated that. Like, distributors used to have 100% return privileges with
Yeah.
retailers. So there really wasn't a cost to them per se. There was a cost, it just wasn't being charged. And now you see
Yep.
more people saying, well, the manufacturer's giving me this much inventory protection, so that's what I'll give you. And so those things continue to evolve and will continue to evolve because there's a cost to all this stuff. And
Yep.
ultimately people will end up paying for it. It's just how you go about doing it, right?
Yeah, it's always so fascinating to me on that, where some of these terms that get you like inventory protection and all that, and people all of a sudden you almost get like you almost instill a sloppy mentality in people when you start to think of things like that. Not that it's not true that there's some inventory protection, but there's just all these opportunity costs that come with it. And I used to think about it. I overseen distribution for a retail at a time, and I remember when we used to tell the retail locations that a product was allocated, all of a sudden they would end up hoarding it instead of going
Yes.
out and selling it. And so if you but they just thought that allocated meant that, hey, we're not going to be able to get any more, and then they would just hold it. And so it's just the psychology of all these things play into so much too, where you just need to have a detailed conversation of what that actually means and what you're going to be penalized for if you start to not think about these things with a true kind of business mentality around it.
Yeah, it's funny, the story I'll share around that when I was at United Suppliers and we were a wholesale distributor and we finally put the capability that every warehouse manager could see the inventory that all the other warehouse managers had.
Yeah.
So when it came time to allocated products and all that, okay, well, no, I need this because I think I have a customer who wants some. Well, you either sell it to them now or we're moving it to where there's demand. And
Yeah.
so, and it creates all kinds of new dynamics in running a business, but ultimately that transparency is going to help you run it more efficiently.
Yeah, it's exactly it. It's just those little. It's crazy what the little process changes can do from an efficiency perspective. To your point on just giving visibility to everybody to better understand it, and I think just some of these little processes and little incentives go so far in any business, but in retail specifically. I used to think of there's a story at a retail I used to work at where the retail locations were incentivized purely on sales growth and not on margin. And what actually happened is the retail itself at the time didn't want to invest in any sort of capital infrastructure, so application equipment. And so what ended up happening is all the location managers went out and purchased their own little spreader units. And what they would do is say, hey, I'll sell you all this product at cost, and you pay directly to me the actual spreading
Oh,
fee or the
wow.
actual service fee. And so there was a bunch of these little retail locations that got this idea, and they did that. And the new CEO came in and kind of got rid of them all. But it's just one of those interesting dynamics of how poor incentive structures just creates these really perverse outcomes that are bad for a business. And I think when you start to look at things from okay, how do we do it from a margin perspective, and how do we actually not think about investing into these assets that are going to get a return that meets our hurdle rate and all those sorts of things, right? So anyways, all those little stories that are not the rule by any means, but they also reinforce that things are never perfect.
Yep. Yeah, I
um,
think that's a great example of a story that in how you incent, and I do feel like, really all parts of the channel in ag business have gotten better about aligning incentives with the behaviors they're looking for. So,
Totally.
but that's evolved over, decades. So,
Yeah, it's easy to sit here and laugh at it as like, hey, it's crazy they never thought about it. But again, you always stand on the shoulders of giants, and people have to make mistakes so that you can
right.
learn from them, right? So,
Yep.
but maybe one last question for you, Brad, is in this it could be it's pretty vague, but I think it'd be interesting to hear your take on it. If you were leading a 500 to 750 million dollar in revenue retail business today, what are maybe 2 to 3 strategic bets you would make over the next decade? And that is obviously vague, but maybe it's around capital investment that you would be making or thinking about, or partnerships or collaborations with different companies or anything out there that you would be looking at.
Yeah, I'd look at it in a couple fronts, and this can go a lot of different directions. But I would start with the focus group of my 5 to 10 customers per location that drive 80% of the business, and really understand deeply, and especially thinking about the future. In that group of 5 to 10, you know there might be 2 or 3 that are not here 5 years from now, right? Or at least they're going to retire or succession planning. So I would have a view of who's my customer of tomorrow in mind as a part of this, but really go through all their operations. What are they thinking about? What infrastructure investments can I be making to support that customer? And And that's going to come in a lot of different forms. I think there, in some cases, it's going to be physical assets, and in some cases, it's going to be intellectual information, right? Just bringing knowledge to whether it's agronomic knowledge, whether it's financial knowledge, whether it's whatever kind of knowledge they're looking for. That would be, I mean, it's hard for me to predict exactly how all these technologies are going to impact it, other than I can say it will impact it. It's just now how do I create the right value proposition to keep working with this guy long term?
Yeah, no, I think and it goes back to I think the core is like if you can have a your finger on the pulse of your key customers and be talking to them and having the not just talking to them, but having more business focused discussions with them about where they are heading and the problems they're having, you can be in a better position to find where it might make sense to invest because it's, it's easy to sit and say, well, I would vertically integrate and I'd start to go, proprietary product this, or I'd start to go heavy into the see and spray assets this, but sometimes that might be option number 4 or 5 and the first three options are really, to your point earlier, maybe it's just the better blending assets or it's better coating assets or something like that that are going to make a ton of sense. But I do really think your point on the customer and the customer experience just goes so far and is something that no matter how good you are today, you can always get better at it. I think is the
Yeah.
best part about that recommendation. And I think instilling that sort of culture in teams and staff just goes so far to moving the needle in the future.
The one thing that it's funny and just made me think of this again, it's so weird because like when I was in the manufacturing world, it's like, really, that doesn't seem differentiated, but it's amazing how right product, right place, right time matters and how many people still struggle with that. And the farming game is timing is critical on everything, right? Your applications, your planning, your all that. And so I get why it's still really important. It just seems like, well, how do I differentiate on those things? Yet there are people doing it because, the urgency of that time of year is so critical. And some organizations get it, and some don't see the urgency that they need to see on it.
Yeah, it's totally it, and I think just having that understanding of your people and understanding of things there just goes so far. I used to always think in terms of, if you can understand what is going to motivate the people at a location and you can understand your customer base there, you have a lot of levers with only two technically, but you have a lot of levers to be able to pull on to be able to figure out what to do and where to allocate resources and how to move things forward. And whether it's build out a unique portfolio or invest in strategic assets or bring in new suppliers that might make sense in a certain way. So anyways, I think that really resonates with me. And, with that, that's all the questions I had for you. I don't know if there's anything else you wanted to talk about before we call it a day.
Yeah, probably only one other thing because we didn't touch on it a lot is, and it's funny. I was listening to the NVIDIA CEO this morning, and he talked about, you got all these people that have made all this money from the appreciation of your stock. How do you keep them motivated? And, we've talked about that a lot, but your culture as an organization is so important. Um, and, we're feeding the world here. It should be easy to find your purpose in ag retail or in whatever part of the channel you're in on getting people motivated around what we're trying to accomplish here, the broader goals, not just I'm doing work for a paycheck, but there's some really important work that we do in this industry. And how do we create a culture to attract the best talent to make them feel good about what they're doing is I don't always think we spend enough time on that, but there are some people doing it, and I feel like they're differentiating themselves in the marketplace because of that.
Yeah, totally. And I agree with you. I think it's the industry for those that didn't call it come from a farm, it can be pretty intimidating to walk into, because the first conversation, the first point of any conversation or boardroom is, what's your background? And it always is, well, I grew up on a farm, or my grandparents farmed, or my great grandfather farmed, but I spent time at my friend's farm. And so everything always ties back to that, or else you like almost don't have credit, which I think is silly, because you need people that come in from different experiences that are willing to really ask a lot of good questions. And I think of, one founder that I have a ton of respect for is Alexander Reicher at AgVent, and doesn't come from a farm background, but the curiosity that guy has to ask questions constantly, and really good questions, to understand problems and dynamics and things. And that's the type of people you want to be attracting into the industry, that are going to help make a difference for people like you and I that have kind of grown up in the industry and come from it. But I do hope that we can continue to really attract more intelligent and competent people that do want to support retail or the greater ag industry itself.
You bet. I totally agree with you, Shane.
Yeah, I think, with that, I can't thank you enough for having the conversation. I know retail's near and dear to my heart, and it's something that I'm super passionate about. And I love hearing the perspective from somebody that's built in the industry, works in it in a really interesting way today. And so thanks a ton for sharing your perspective today.
Yeah, thank you, Shane. I really enjoyed it as well.
Thanks a lot.